Good morning, natural gas. It's Thursday, February the 5th, 2026. I'm Tim Beggins, president of Elk Trading Company. And for the spot March contract, we're currently up just 2.5 cents, 2.7 cents now to 349.20, up 0.78%. The RSI going sideways. Why? We've got a massive storage report coming today. It should be a record. Estimates between minus 360 as high as 385. So what is the market doing? Well, it's going sideways because if it doesn't exceed expectations, it's probably going to come back down. Why? We got some warm weather coming up before potentially we get more and more cold coming back in. Why? We've been on the seesaw pattern about 5, 6 weeks on average, and then shifts again to warmer, shifts back over to colder for that period. So back and forth, we're looking at possibly colder weather coming in around the 21st. Let's take a look at the hourly chart, and we are above the daily pivot, which came in at 342.60. As you can see right now, we are right here holding below the first resistance, which is at 358.70. We got as high as 357.30 on this particular bar. We've gotten very close, but unfortunately, we just haven't been able to push out to the upside. The RSI is turning lower here, so we may see a push down to the first support level, which comes in at 3,303 if the storage report does not exceed already very high expectations. It is expected to be an all-time record. Let's take a look at the front to back spreads here. This is the March versus the April. This is the front spread here. And look what's happening. It looks like it wants to widen out. Why? Cash prices are still fairly strong because we've got low storage stocks in the Southeast. And that means that things are pushing out. For now, we're currently up to 17.2 cents, up 1.5 or 0.95 cents right now, a percentage, excuse me. So there have been a lot of options that have been trading on this particular spread on CME. That's the NYMEX. That what was going on, thousands were trading, buying the 10-cent call, selling the 25-cent call, and selling the flat put against it to finance it. These are all being done between a half and 1 penny. What does it mean? They're expecting this market to move out, to widen to over 25 cents, and that would make all their options go in the money. So let's take a look at the front to back. This is the Jan versus the April, the injection spread. And currently right now we are trading at 165, up 1 penny or 0.61%. The RSI also going flat at this time. So if we get a larger than expected storage report, this spread will compact. It will start to come in and head toward 155.60 and possibly as low as 1505. But if the market does not exceed expectations, look for this spread to widen out here and retest that 168.80 resistance level. Let's take a look at the options market. And here's where the strikes are around this particular March contract. The 350 increasing. We've got over 21,928 open interest right now. That was up. We've also got the highest open interest way back here at the $5 strike, over 49,132. So people are betting that potentially colder weather comes back in and we rally again, just like February. Let's take a look at the weather. And this is the end of the forecast period. So let's take a look at today. And as you can see, that cold weather still dominates across the Great Lakes, all the way back to mid-Atlantic and New England states. It's been absolutely an icebox there, but we get warmer temperatures coming in all the way back here into the 8th, 9th. It's very warm across the entire Southeast, all the way back up into the Dakotas. But then as we look at the end of the forecast period, here comes the cold again on this wind chill factor model for the United States. This is the GFS model. Let's take a look at Europe. And there's the cold again. This is Germany, France, Poland. All of the Eastern Bloc here is still very, very cold around February the 15th. And how are their storage stocks? Well, they're below 40% across the EU, down to 39.2%, and France below 30%. Germany hanging on at 30.2%. 2-day lag on this particular information. So be careful. Storage stocks in Europe are getting low, dangerously low if this weather does come in. And here's Asia. This is Japan. This is Korea's and Eastern China. And as you can see, the cold weather comes in around the 7th, right? So this is when United States is warm. Again, that pattern here, remember, if 2 out of the 3 areas are cold, it's rare that we get that third area. So the United States warms up, Asia gets cold. And here's the snow cover for the United States. And as you can see, that snow cover is keeping temperatures low from the Great Lakes all the way back to the mid-Atlantic states in New England. And here's the snow cover, ice cover for the Great Lakes, 48.8%. It does oscillate back and forth because wind and turbulence will diminish ice. So here's Golden Pass. We're going to keep a careful eye on this because it's supposed to produce first LNG in March. And here's the terminal. It's only pulling in 1,746 MMBTU. So quite low. We're looking to see if this starts to ramp up in the next few weeks. And here's the nuclear outages. They are starting to increase right now. We're up to 5.1 gigawatts. That's really toward the higher end of our range as the southern nukes start to go down. Turkey Point down to 49, Edwin Hatchet 40, just about 50%. Sequoia now going down to about 43% out. And of course, we've got VC Summers completely out. So they're trying to take advantage of some of the warmer temperatures that should be coming in at this time of year. But if cold comes back in, guess what? It's a bigger pull on natural gas. This area, particularly the southeast, is going to be pinched for natural gas if that cold does come back in. So let's take a look at the stocks in the oil and gas E&P sector. Stocks between $2 and $10 billion and have a high short flow. They're down, unfortunately, because we're just getting wishy-washy with natural gas and crude oil. They're all kind of in the mix here. Nothing is particularly strong or weak, other than CRK is down 6.75% for the 1 week performance. But if we pull out a little further, how about 6 months? Looking pretty good. So you've got to pick your points here with the oil and gas sector because they have a high short flow. They can do quite well for you. So think about this. If things start to warm up and these stocks become under pressure, you might consider a position in these particular stocks. So let's look at the March contract right now. Again, recapping, we're currently trading at 351.5, up 5 cents or 1.44%. Again, storage comes out shortly, and we're expecting minus 360 to minus 385. Historical pull. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you tomorrow.